a.m. in New York City this Fed day. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Awaiting Chair Powell, investors look to parse clues on the Fed's path forward with an expected cut this afternoon. POTUS arrives bearing gifts. President Trump begins his UK visit with American tech giants pledging monster AI investments. And China is said to have told its biggest tech firms to stop buying Nvidia's tailor-made AI chips and cancel existing orders, this according to the FT. So let's take a look at those markets, because up until those headlines on China cancelling Nvidia orders, futures were treading water, but at least pointing to some gains today. Right now we're in the red, although fractionally. So we'll see how this pairs out throughout the day, but it does show you the importance of Nvidia to this market. Russell 2000 futures still just fractionally higher, of course. That 25 basis point cut and some more by April already very much priced into this market. Let's take a look at yield, and you'll see exactly what I am talking about. We have the 2-year yield now down to 350. That's another few basis points lower since the beginning of yesterday's session. The 30-year yield below 462. It was a big deal yesterday when I was saying it was below 470. And the 10-year yield just barely above 4%. Let's get to some individual stocks to watch now. Here's Valerie Teitel in London. Valerie.
Good morning, Bonnie. Let's start with how Nvidia is reacting to this FT report that China's internet regulator has told the country's biggest tech companies to stop buying all of Nvidia's AI chips. This report does detail that does include the chip called the RTX Pro 6000, which is one of Nvidia's Blackwell chips tailored for the Chinese market that was just released a few months ago. So Nvidia in the red off the back of this report. This is what analysts are saying is some of the strongest guidance yet from Chinese regulators against Nvidia's products. Let's stay in China, move over to something a bit more positive, and that's the shares of Baidu flying this morning, up nearly 9%. The stock has rallied some 40% since the beginning of the month. This is all around optimism around its growth potential of its own in-house chip venture. It also received a big upgrade from the street as well. So more optimism when it comes to China's AI ingrown tech technology. Let's end in the energy space. New Forest Energy surging in the pre-market, up 55%. They have signed a 7-year deal worth $4 billion with Puerto Rico. This company has been financially strained recently, a large debt crunch, and has been worsened by delays in some of its Latin American LNG export facilities. But this deal with Puerto Rico is giving some investors some enthusiasm about the stock. Bonnie?
Valerie, thank you so much. And again, as Valerie said, we'll see the importance of this Nvidia move with China telling its big tech firms to cancel the tailor-made chips that had just been started to get produced about 2 months ago, plus cancel all existing orders. Well, in just moments, we're going to catch up with George Saravelos of Deutsche Bank on the dollar. And later this hour, we'll count down to the Fed with Andrew Hollenhorst of Citi. But first, President Trump's 2-day state visit to the UK kicking off.
They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. And they'd like to see if they could get a little bit better deal. So we'll talk to them.
I'm joined now by Bloomberg's chief UK correspondent, Lizzie Burden, who's on location in Windsor. So, Lizzie, there's a lot of emphasis from both sides on signing business deals during this visit. What does the UK have to show for all of this so far?
Well, we've got pomp and pageantry on the table, and the hope is that business will come in return. Bonnie, welcome to Windsor, this 11th century fortress behind me. Not the usual venue for a state visit, of course. That's Buckingham Palace, but this isn't Trump's first state visit. It's an unprecedented second. And as you say, so far we've got $10 billion worth of economic deals expected to be announced by President Trump, and that includes defense tech cooperation, a nuclear partnership. Also, the Financial Times reporting that there could be closer cooperation when it comes to digital assets. But I have to say, there is an ocean between US and UK regulation when it comes to cryptos. So a lot of pressure on London to move there. Some of the biggest names in Silicon Valley will be flanking the president on this trip. We've got OpenAI's Sam Altman, Nvidia's Jensen Huang, and already commitments on the table from Microsoft of $30 billion, from Google of £5 billion towards artificial intelligence. Seems a bit of a drop in the ocean compared to their overall capex. But nonetheless, while it's good news for tech, it's not necessarily as good news for all sectors. I'm thinking about steel.
Yeah, absolutely. Bloomberg reporting that the steel tariff talks with the US and the UK, they've been shelved for the moment. What's the latest on that?
Yeah, so it looks like Keir Starmer is going to accept for now this 25% tariff on UK exports of steel to the US. Of course, that's lower than the 50% that other countries are facing, so perhaps somewhat of a competitive advantage there. And it gives businesses less uncertainty. But it's still a blow to companies that were hoping for better. And Starmer, of course, touted zero tariffs. So the opposition saying, why did you do that when it wasn't guaranteed? We're also having our expectations managed when it comes to tariffs on Scotch whisky going from the UK to the US. And so it looks like we need to wait and see what that wiggle room Donald Trump is referring to actually is. He knows that he's got the leverage over Keir Starmer here. This could not come at a worse time politically for the UK Prime Minister. His party languishing in the polls behind Trump's friend Nigel Farage and the Reform UK party. He's lost 3 of his government in just the past 2 weeks, including the UK ambassador to Washington, Peter Mandelson, over his ties to Epstein. So there could be some very awkward conversations coming up over the next couple of days.
For sure. Lizzie, thank you so much. That is our chief UK correspondent, Lizzie Burden. Back in Washington, the Fed's rate decision set for 2 p.m. Eastern. George Saravelos of Deutsche Bank writing this, quote, fiscal dominance risks should be more clearly apparent in both higher long-end U.S. inflation break-evens and a higher risk discount on the dollar, more of which is materializing. But none really is materializing yet. We can find no convincing argument as to why the market should not be pricing more of this risk in. George joins me now. He's global head of FX strategy at Deutsche Bank. So, George, since you wrote that, yields have come down quite substantially, I would say. What are yields telling you right now?
Well, I think there's a big battle at the moment between the economic shocks that are hitting the US. On the one hand, you have a slowdown due to effectively a tax increase on the back of tariffs, and that's a classic negative demand shock. And on the other hand, you've got a major negative supply shock because of the slowdown in immigration. And the hard part of understanding a supply shock is that it slows growth down, as we've seen in the slower payroll numbers, but it could potentially make inflation stickier. And I think in this instance, specifically in wages. If you actually look at the US data, that's what you're seeing. It's wages that are starting to look a bit stickier. And I think the market and the Fed is grappling with how to manage both of those risks that are materializing and currently playing out in the data.
So does the Fed have less leeway to be dovish then today? Because the market is certainly expecting that and has pretty much priced that in.
Well, it's interesting because there is some debate around potentially a 50 basis point cut because, as you may remember, that's what happened this time last year. But if you look at market pricing, it is much closer to that 25. And that's, I think, precisely because of these conflicting dynamics. So we'll have to see how it plays out. Now, on top of a very hard to read economic picture, you, of course, have this issue around fiscal dominance, loss of Fed independence. And Stephen Miran, for example, will be on the table for the first time. It'll be very interesting to see what vote materializes, the vote split that materializes out of this Fed meeting today.
Yeah, exactly, because Lisa Cook, in theory, is there as well. Do they both get dots, and will it be obvious which dots are Stephen Miran's?
Well, it will depend on how extreme those dots are. I think the market will certainly be scrutinizing. There is certainly an expectation that you will see some dissents towards, assuming the Fed cuts 25, there is an expectation that there'll be 2 or 3 dissents around 50 basis point cut. But there is a question, could we even get a dissent around a 75 basis point cut? And I think the market might react a bit more negatively to that because it would really show an absence, a lack of willingness to perhaps coalesce a more conciliatory view on how the rate cycle should play out. So I think the market will be very closely scrutinizing both those dots and the votes.
George, how much does it matter to the real economy and to the transmission of this 25 or 50 or whatever we get today cut, assuming we get one, you know, in the sense that markets are also going to react to it. So how much will the cut do any good, if you like, to the real economy and do what it's supposed to do?
It's interesting because if you look at the sensitivity of the economy, the US economy to the front end, it's actually fairly low. In contrast to most European economies where you saw those rate cuts, the housing market tends to react very quickly because most loans are in the short part of the curve. They're fixed to short-term interest rates. In the US, it's all about the back end. So the sensitivity to these Fed rate cuts should be quite low, in the same way that the sensitivity was low when the Fed was hiking, because if you remember, the Fed hiked all the way through 5%. The economy didn't show much reaction. So I'd say it's a lot more about the back end, which is exactly where the Trump administration is focused on. And the key question really is, how does the back end react to what the Fed is doing? If the data is weak, if inflation is weak, as we have seen in recent months, inflation has been on the softer side, then the back end would be coming down as the Fed's easing rate. So you see that transmission. I think the trickier question will come if the objectives around employment and inflation start to conflict, and the Fed is still easing as you're getting stickier inflation. I do worry about that dynamic over the next few months, especially in the labor market and in wages. And then the behavior of the back end could actually be in reverse, where you see a tightening. So it is a very, very complicated macro picture, so to speak, for the US. And I think in some sense, the reason why the dollar's weakening is precisely because of all these cross currents.
Yeah, I want to ask you about the dollar in just a second, but do you imagine all these, Treasury moves will be orderly, or is there any part of the market that you're worried about might get disorderly?
I think the more violent moves would come if you see the Fed objectives in conflict and the market interpreting Fed action as a shift in reaction function. Because it's true, there is a lot of discussion in the market around the loss of Fed independence. But if you look at what the market's pricing, it's not really embedding a shift in the reaction function. The curve that is priced in terms of cuts is very much in line with what one would expect in terms of reasonable so-called Taylor rule inputs. But what would be interesting, and I think where the market would get more violent, is if you start to see deviations from that, which again boils down to where will the inflation picture be in 3 to 6 months' time, and how is the Fed voting around that inflation picture?
George, I just want to ask you about the dollar, because we're obviously seeing a huge amount of weakness, but we have the euro again today, 118.47, the yen 146.37. Does this continue?
So our view is that it does. I think what's interesting is over the course of the year, you've seen huge shifts in underlying flows into the US. So in the first half, it was all about a slowdown in inflow. You did see a buyer strike around the months of the so-called Liberation Day tariffs. And what's happened since is we're seeing those inflows return. They're at levels that are below where they were last year, but nonetheless, you have seen a return of buying. But crucially now, you've seen a huge shift in hedging behavior. And it's something we've spent a lot of time on in terms of trying to get the real data analysis to back those statements up. And when we look at our data, what we see is a massive increase in hedging of dollar exposure. So investors are going back into US equities, the tech sector specifically, but they're not really willing to accept that dollar exposure that comes with it. And I think that's why you're getting this mix of a rebound in the US stock market, but the dollar remains weak, because from an FX perspective, you're not seeing that dollar demand.
George, pleasure to speak with you this morning. Thanks for making the time. That's George Saravelos of Deutsche Bank. Now to other top stories trending on the terminal this morning. UK inflation holds at its highest level in more than a year and a half. August consumer prices rose 3.8%, the same pace as July. This will likely keep the Bank of England wary about cutting rates. The BOE meets tomorrow. British drug maker GSK pledges to invest $30 billion in the US over the next 5 years. The investment will include a biologics facility in Pennsylvania. The announcement was made just as President Trump arrived in the UK. The US accounts for about 50% of GSK's revenue. Apple's smartphone sales in China in the weeks leading up to the iPhone 17 launch fell 6%. That's a deeper slump than is typical ahead of a flagship product release. China's overall smartphone market shrank 2% over the period covering July and August, despite government subsidies to encourage consumption. Coming up, Nvidia falling pre-market after a report China has ordered local firms to stop buying its tailor-made AI chip. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of Nvidia turning negative in the pre-market on news from the Financial Times that China has told its biggest tech companies to terminate orders for any Nvidia's tailor-made chips. For more, Bloomberg's executive editor for global tech, Peter Elstrom, joins me now. So, Peter, following earlier guidance warning about Nvidia and an anti-monopoly ruling, how significant is this latest edict from China?
Well, what I'd say is there's a lot of politics in the tech industry right now, and there's a lot of tech in politics. This is the second move against Nvidia that we've gotten out of Beijing just this week. The cyberspace administrator, as you alluded to, first said that they're guilty of antitrust violations. Now we're getting these signals that it's telling companies not to buy all of Nvidia's chips. Now, remember the context here. On Friday, we're expecting this call between Donald Trump and Xi Jinping. During that call, we expect that China is going to give way. It's going to give control over TikTok in the United States to American investors. It's very important to Xi and the Communist Party not to look weak internally. They don't want to be seen as giving up too much. So I would view these moves against Nvidia in the context of them having to look tough to the domestic market, where they want to be seen as taking action against the American tech industry and against the United States companies more generally. So we'll have to see how serious this move is against Nvidia. Nvidia, of course, makes the best AI chips in the world. All the companies in China want to be able to buy their chips. But now what we're seeing is this kind of reversal, whereas before the United States didn't want to sell them into China and Chinese companies wanted to buy them. Now we're getting signals that the Trump administration is going to allow them to sell the chips into China, but Chinese companies are going to stop buying them. It's hard to imagine that that's actually going to come to fruition, because right now Chinese companies don't make advanced enough AI chips that the companies there can really use them and train their models as effectively as if they were using Nvidia chips. And they probably don't have enough capacity to be able to meet domestic demand. So there are a couple of things they need to overcome there.
That's fascinating. So you think there might actually be a reversal and, in pretty short order, potentially?
We'll see how far this goes at this point. The Chinese companies that are building the most advanced AI models, that's DeepSeek, Alibaba in particular, Baidu is trying to be in that market, and Tencent, ByteDance included. They want to have the most advanced chips. They'd like to be able to buy Nvidia's most advanced chips, just like the companies in the United States. Beijing may not allow them to buy the most advanced chips. They may want them to rely more on domestic suppliers. But at this point, at least, domestic suppliers aren't able to meet that demand, both in terms of quantity and in terms of quality.
Peter, Bloomberg reporting that Oracle and Silver Lake, Andreessen Horowitz as well, among buyers of TikTok's U.S. operations. What are the details over how much control, let's say, over the app will be, in U.S. hands and in Chinese hands?
Yeah, it's hard to keep up with these TikTok negotiations. They've been going on literally for years, where they face this threat of a ban in the United States. Finally, it looks like we have a deal where American investors will come in and will take majority control over the U.S. operations only, just to be clear. That'll include, as you mentioned, it'll include Oracle, Silver Lake, Andreessen Horowitz, and ByteDance, the parent company right now that owns 100% of the company. They're going to have their shares decline to less than 20%. As part of that deal, we understand that they're going to license the algorithms that recommend exactly what kinds of videos you see next. So the TikTok, the app, may look very similar, but there'll be U.S. investors. Also, the data is going to be stored with Oracle in the United States, so that user data is also going to be safe from the Chinese parent company.
Peter, thank you so much. Peter Elstrom there. Coming up, Ben & Jerry's co-founder Jerry Greenfield quits, and a look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, President Trump and his top officials lay out a broad plan to silence political opponents in the wake of Charlie Kirk's killing. The measure targets liberal groups, monitors speech, and designates certain groups as domestic terrorists. Prosecutors filed a first-degree aggravated murder charge against suspect Tyler Robinson and intend to pursue the death penalty. Next up on the FT, a U.S. congressional panel has released more files related to Jeffrey Epstein. The documents offer limited new insights, but lawmakers on the House committee signaled they'd continue to press for more disclosures. The release coming just as President Trump arrives in London. Last week, UK Prime Minister Sir Carmer fired Lord Peter Mandelson as British ambassador to Washington over his friendship with Epstein. And on the Wall Street Journal, Ben & Jerry's co-founder Jerry Greenfield has quit the company after 47 years. He said the brand's freedom to speak out on social issues has been stifled by parent company Unilever. When Unilever bought the brand in 2000, Ben & Jerry's negotiated an agreement to protect its right to speak out. Coming up, we push ahead to the Fed decision with Andrew Hollenhorst of Citi. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Awaiting Chair Powell, investors look to parse clues on the Fed's path forward with an expected cut this afternoon. POTUS arrives bearing gifts. President Trump begins his UK visit with American tech giants pledging monster AI investments. And China is said to have told its biggest tech firms to stop buying Nvidia's tailor-made AI chips for the country and cancel existing orders. That's according to the Financial Times. Let's take a look at markets. That's where it's all happening. At the moment, nothing is happening, but it will be no doubt throughout the afternoon. Now, we did have Nasdaq 100 futures turn slightly negative earlier on those Nvidia headlines, but really, traders are just treading water. We have the dollar weaker and the usual for futures at least pointed in the green for the Russell and the S&P. In yield land, though, we are seeing a few basis points of a move with the 2-year yield now down to 350, the 30-year yield down to 462, and that 10-year yield very, very close to dipping below 4% right now. So that is a 7 basis point drop just since Monday alone. Let's get to London now. Here's some stocks to watch with Valerie Teitel.
Bonnie, let's start there with Nvidia. This FT report that the Chinese internet regulator has banned the country's biggest tech companies from buying Nvidia's AI chips. Nvidia is down over 1% on the back of this news. The report does focus on the chip called the RTX Pro 6000, which is a chip that is more similar to their Blackwell chip in its uses. Some of these companies, such as Alibaba and ByteDance, have already started testing of this chip, but they have been ordered to terminate that activity. This is probably the strongest signal yet from the Chinese authorities of their clampdown of Nvidia's use in China. Staying in China, moving on to a different company, Baidu, rising in pre-market, up nearly 9%. This is off the back of optimism that this largest internet search provider in China is getting in to the chip business, recently upgraded by the street, and this chip stock has rallied over 40% since the beginning of the month as enthusiasm grows for China's own homegrown AI chip industry. Lastly, ending in the energy space, Vonnie, New Forest Energy has signed a 4-year agreement with Puerto Rico, valued at around $7 billion, which is giving a decent boost to this company pre-market, up 46%, which had been grappling with some debt issues. But this agreement with Puerto Rico hampers those worries at the moment.
Valerie, amazing. Thank you so much. That's Valerie Teitel there in London. Andrew Hollenhorst of Citi looking beyond the Fed's decision this afternoon, writing this. Instead of cutting by 50 basis points in September, we expect Fed officials to guide towards a series of rate cuts, with the September dot plot likely to show 3 or 2 cuts this year, depending on August inflation and retail sales. Officials could also lower the 2026 median. Andrew joins me now. He's chief U.S. economist at Citi. So, Andrew, a lot has happened just in the last few days alone. What are you now expecting to hear from the Fed chair this afternoon?
That's right. We have some of that data in, and with the slowdown that we've seen in job growth and then core PCE inflation that looks like it's going to be around 20 basis points for this month, which is close to target when you annualize it. I think that this creates a path for the Fed to really get a little bit more dovish here and to guide towards 3 rate cuts this year. They have the dot plot. They'll show us a median dot that in June had 50 basis points of rate cuts this year. Today, we think we're going to see 75 basis points of rate cuts this year. So this movement towards a more dovish view from Fed officials.
What would happen if the Fed chair doesn't sound as dovish as all of that? Because he may make the calculation, look, this will panic the market if I, put it up right up there up front that we're going to see 3 rate cuts. He can't really say that, can he?
Well, I think the concern really would have been with, do they cut 50 basis points at this meeting? And that's part of the reason I think they won't cut 50 basis points at this meeting. If they cut 50, that's kind of, in a way, acknowledging that the Fed has gotten behind the curve and that they need to catch up in a big way. And the equity market is not pushing them to cut 50 basis points at this meeting. It's not that we have a sell-off in risk assets. Risk assets have actually rallied. So I think what they can do is something in between where they're guiding towards more rate cuts. Now, to your point, we have about 70 basis points of rate cuts that are priced into the interest rate markets. That means that Chair Powell better sound relatively dovish to at least affirm the 70 basis points that are already priced in. The point that I'm making is with the recent data, I think they can not only affirm that, they can really push towards 75 basis points this year, further rate cuts next year, and if anything, we can price even a little bit more in. But that's right, there is a pretty high bar in terms of the market is already expecting a lot of this dovishness.
So you're not concerned then too much about inflation anymore? You think we've seen the worst of it, or the economy is able to handle a little bit more?
I think relative to where we thought we might be at this time this year, the inflation data has come in much more encouraging for Fed officials. So there's still this whole discussion about, is tariff-related inflation going to be a one-time movement higher in the cost of certain consumer goods? Is there going to be something more persistent there? But while we've been having that debate, we've been watching the data. And what the data are telling us is that those cost increases related to tariffs are not being passed through in a very strong way into final consumer prices. We really haven't seen that much.
We are seeing consumer prices, as you say, maybe not jump up, but we're seeing margins contract.
So that's right. So it's really the firms, the businesses that are actually shouldering the cost of the tariffs. And that would be more reason to be cutting interest rates, because that would be a reason that you would think that firms maybe are going to be hiring less people, which we are seeing in the data now, more reason to support the economy.
So what does the Fed chair say exactly? And, he has to manage the fact that, it's obvious that the perception is going to be that it's more dovish Fed with Stephen Myron there, as well as Lisa Cook now, and the potential for a different Fed chair next year. Doesn't he have to protect the Fed a little bit against that?
So Chair Powell has to try to make a consensus out of a committee that has obviously had some pretty differing views over the last few policy meetings. We had some Fed officials that didn't want to cut rates at all this year. We had other Fed officials who dissented at the last FOMC meeting, wanting to start cutting rates in July instead of waiting until September. I think you may see some of those dissents again today. You may see some Fed officials, maybe Stephen Myron, dissenting and saying they should be cutting 50 basis points at this meeting rather than 25 basis points. And what Powell can say, in a way, he can just point to that and say, this is all the robust discussion that we should be having and that we are having about where policy rates should be. Again, it's a little bit easier because of the data, because we've had such weak jobs data, because the inflation data, if anything, has been softer than expected. I think that makes the path a lot clearer for Powell.
So, as you say, we're going to see Stephen Myron there today. Is there any possibility that this meeting turns a little bit, into a disarray, that there's too much dissent, that, that if the Federal Reserve that's expressing that kind of dissent out into the market really, affects the market in a deep way?
Well, in July, we saw 2 dissents from governors. Now, it's not often that we see governors dissent. It's more common that you see regional Fed presidents dissent. So that was notable that you had those dissents in July. Chair Powell talked about it then. I think he'll talk about it again at this meeting, that this is a turning point for policy. We've had policy rates that have been on pause. There are real fundamental economic disagreements about how persistent elevated inflation is going to be, how worried to be about the job market with very conflicting data in the job market. So there are real fundamental economic reasons to have disagreements about where policy rates should be. I think that's what Chair Powell will talk about. And again, I think he has an easier path actually than where maybe he would have been. Let's say we had had a very strong inflation reading. There would have been a lot wider array of opinions about what the Fed should be doing at this meeting. I think most Fed officials are going to want to cut 25 basis points, maybe a couple dissents for 50.
Are we going to come out of this news conference knowing exactly where the Fed is worried about in terms of balance of risks, whether they've actually shifted, completely towards the employment side of the mandate?
Yeah, I think we never know exactly what Fed officials are thinking, and they always kind of try to preserve optionality about what they might do at future meetings. So I don't think we'll have an explicit indication of what they will be doing at the upcoming meetings. But we know at the Jackson Hole Symposium, this was late August, before we got the most recent jobs data, Chair Powell was already saying this balance of risk has shifted. We were more concerned about upside risk to inflation. Now this downside risk to employment has risen in terms of the risks that we're worried about, and that means there's more balance. That means that we should start adjusting policy rates. That's where he was in late August. Since then, we've had weaker jobs data again, so I think we're shifting more towards concern about employment.
Beyond this meeting, are you concerned at all that there might be some unorthodox tools brought in to be used now that we have somebody, very close to the administration that's on the board and potentially more?
Well, it's still a committee decision. I think what we're hearing from the committee is just an intent to move policy rates towards neutral. Balance sheet reduction is ongoing. I think there will be questions about how long you leave that balance sheet reduction going or not. But in terms of the tools that they're using, the balance sheet, interest rate policy, these are the typical tools that we see the Federal Reserve.
Sure, but you're not worried about yield curve control down the road or anything like that?
No, not at this point, again, we're still reducing the balance sheet, right? We haven't even stopped balance sheet reduction yet. So this would be very far down the road where you would worry about something like this.
All right, Andrew, good luck today.
Thank you.
Andrew Hollenhorst there of Citi joining me in studio. Now, two other top stories trending on the terminal this morning. BlackRock and Blackstone are said to be vying to invest billions of dollars with Saudi Arabia's new AI company, Humane. According to sources, the PE giants have held preliminary talks with the company about committing significant capital to data centers and related infrastructure. Representatives from all three companies declined to comment. Sources say China has released a Wells Fargo banker it had blocked from leaving the country. The exit ban was lifted ahead of a potential in-person meeting between President Trump and President Xi Jinping. Chinese officials said in July that the banker was involved in a criminal case that was under investigation, without giving details. StubHub raised $800 million in an IPO that priced in the midpoint of the range. It sold shares for $23.50 each after marketing them for $22 to $25. StubHub has pursued going public since at least 2022. Coming up, President Trump is in the UK and deal-making is on the agenda. This is Bloomberg.
They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. And they'd like to see if they could get a little bit better deal. So we'll talk to them.
President Trump's second state visit to the United Kingdom kicks off. He'll meet with King Charles later today, with Washington and London signaling some deal-making may be happening on the sidelines. Our team coverage starts right now with Bloomberg's chief UK correspondent Lizzie Burden in Windsor and White House correspondent Kate Sullivan. So Lizzie, what is on the agenda exactly over the next couple of days?
Well, it's all about the pomp and pageantry today, Vonnie, what the UK does best. So in theory, it's a low-risk day here in Windsor. But, of course, that's a relative term when it comes to the president. You'll remember on his last state visit to Buckingham Palace in 2019, just as they sat down for the state banquet, everybody in their finery, an interview dropped in the Sun newspaper where he'd criticised then Prime Minister Theresa May. So embarrassing for all. We brace for something similar perhaps this time. But on the agenda today, we're expecting the King and Queen to greet the President and First Lady here at this 11th century fortress behind me. They'll have a horse-drawn carriage procession around the estate with the Prince and Princess of Wales. Apparently, Trump very fond of William, and he said he was very handsome on his trip to Paris last year, so they're trying to deploy him again. They'll have lunch privately. They'll lay a wreath on the tomb of the late Queen Elizabeth II, and then, of course, it's got to be on to business, and we're expecting $10 billion of economic deals to be signed on this trip. Already commitments from the likes of Google and Microsoft in the billions.
Yeah, exactly. Lizzie, tell us more about that. The UK pushing for a deal on steel tariffs in particular, but that does seem to have stalled. What do we know more about that?
Exactly. 25% steel tariffs look to be what Keir Starmer is going to accept. Now, the hope, the promise was that we would have zero tariffs on UK steel exports to the United States. But it appears that Starmer has accepted the certainty and the fact that 25 is lower than the 50 that other countries are paying on their steel exports. It is a blow to British business, but it's an exercise in expectations management. We're also expecting that there won't be much wiggle room when it comes to Scotch whisky tariffs exports to the US. Now, this is perhaps, despite Donald Trump's promise there of the ability to refine these deals, because he knows he's got leverage over Keir Starmer. This is a terrible time in domestic politics for the Prime Minister. His party is really languishing in the polls. Inflation remains high, and he's lost 3 from his government in just the past 2 weeks, including the UK ambassador to Washington, Peter Mandelson, over his ties to Jeffrey Epstein. And it has to be said, Vonnie, Peter Epstein is the tie that binds the Prime Minister via Mandelson, the King via his brother Prince Andrew, and Donald Trump himself. So there could be some painful small talk and maybe a question at the press conference. Does Starmer believe that those with links to Epstein are really deserving of high office?
No doubt there will. Kate, this visit has brought some news already of US investments into the United Kingdom. What is the scoreboard currently?
That's right. So the big deliverables from this trip have mostly so far been focused on tech. So Microsoft, AI, and other U.S. companies have announced that they're going to spend tens of billions of dollars on technology infrastructure in the UK. And actually, Microsoft alone said that it would invest $30 billion in the UK to expand AI infrastructure and build the country's largest supercomputer. So tomorrow we're expecting, as you mentioned, this press conference with Trump and Starmer. We're expecting them to tout this big new US-UK tech partnership. They're calling it the Tech Prosperity Deal, and tout the billions of dollars that are going to be invested in AI, quantum computing, and nuclear energy.
And then Microsoft CEO Satya Nadella is reportedly in the delegation from Washington along with some other US CEOs. What else do we know about who's joining Trump?
Yeah, so several other top tech CEOs are going to be part of this trip. You know, as you mentioned, the CEO of Microsoft, but also the CEOs of Nvidia and OpenAI. We unfortunately don't have, the guest list for who exactly is attending what event, but there's, of course, this big state banquet tonight. There's going to be a business reception tomorrow at Checkers. So we're really seeing these, we're expecting these tech CEOs to be attending these events and really included in this trip in a very big way, and in addition to the tech CEOs, where, of course, part of the U.S. delegation includes Secretary of State Marco Rubio, the Treasury Secretary, the U.S. Special Envoy Steve Witkoff, White House Chief of Staff, and several other top White House and administration officials.
All right. Thank you so much to you both. That's Kate Sullivan there and Bloomberg's Lizzie Burden. Well, turning to US-China tensions ahead of the Trump-Xi talks scheduled for Friday, the Financial Times reporting that Beijing has now ordered its biggest tech firms, including Alibaba and ByteDance, to stop orders for Nvidia's tailor-made chip to the country and also cancel existing orders. Shares in Nvidia falling pre-market there to the tune of almost 1%. Bloomberg's executive editor for Global Tech, Peter Elstrom, is back with us. Peter, following earlier guidance warning about Nvidia and an anti-monopoly ruling, how significant is this now latest edict 24 hours later from China?
It's important to keep in mind the political dynamics here. As you mentioned, this is the second move against Nvidia this week. Earlier, we had this announcement by the cyberspace administrator in Beijing that Nvidia was guilty of some antitrust violations. Now we're getting signs that they may be restricting Chinese companies from buying their AI chips. The important thing to remember is that Xi Jinping is going to talk with Donald Trump later on this week on Friday, and they probably are going to cede control over TikTok in the U.S. So Xi Jinping is going to have to make a very big concession to the United States on Friday, and I would view this in the context of setting that up and making sure that he doesn't look weak to his domestic audience. So they're taking some tough moves against Nvidia and against American companies more broadly. The key question here is how significant is this going to be? Chinese companies want to be able to buy Nvidia chips. But they've been encouraged by Beijing in particular to rely as much as they can on domestic supplies. The trick is that domestic suppliers like Huawei and Cambricon are not actually that sophisticated at this point. Their chips aren't as good, and they can't make enough of them to be able to meet domestic demand. So those are two hurdles that they would have to overcome before it actually begins to impact Nvidia's business in a significant way.
And we should mention that Jensen Huang is actually with President Trump on his UK visit as well, so he'll be able to have his ear for a few moments before that call. Now, separately, Bloomberg is reporting that Oracle and Silver Lake are among the buyers of TikTok's U.S. operations. Give us the details. How much control over the app will the U.S. have? How much will the Chinese government still have, potentially?
Yeah, this is a debate, of course, that has been going on for years at this point. The American government has wanted to ban this app. It was President Biden who signed into law this regulation that ByteDance, the parent company, would have to either give up control of the app in the U.S. or shut it down altogether. Finally, we have a deal. It looks like a consortium, including Oracle and Silver Lake and Andreessen Horowitz, are going to take control of the company. They're going to have a majority stake. ByteDance is still going to have some equity here. It's going to go below 20%, is our understanding. They're also going to license the algorithm for recommending content to the consortium so that they'll be able to continue to use that. It's going to mean some changes for the app, but it is going to continue to run in the U.S.
Peter, thank you so much. That is Peter Elstrom there. Thank you. Coming up, data and rate decisions on deck. We'll get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead today, as if we didn't know. But there are other things going on today as well. First up, housing starts and building permits data. They come in at 8:30 Eastern Time. Then the main event, the Fed decision at 2 p.m., followed by Fed Chair Powell's news conference at 2:30. And of course, President Trump will meet with King Charles during his state visit to the United Kingdom. Let's take a look at some micro movers now, because we are looking at Nvidia very closely. China has just in the last few minutes issued an edict banning AI chip sales for domestic tech firms. This is according to the FT. It's chips that were dedicated to China, so just the ones that Nvidia has been making in the last couple of months, but it is sending Nvidia lower. Just another hit to that stock from China this week. Workday, Elliott Investment Management, says the human resources software company has made substantial progress in recent years. A nice compliment there for Workday, and it's helping those shares pre-market. Baidu, US shares rising more than 8%. This as Hong Kong buy calls get louder in the AI hype. And of course, as Hong Kong and Chinese stocks just move higher over the last few weeks in general, a weaker yuan as well. Let's get to the macro movers, because as I say, we're treading water really, but we were green for NASDAQ 100 and S&P futures until those Nvidia headlines hit. I think there won't be that much trading done before the Fed. You never know though, a few individual stocks perhaps. Let's get over to fixed income, because that's where we're potentially really going to see the volatility today. Wow, that two-year yield is now below 350, so we just keep coming down. I guess it's just more and more cuts priced in and more dovish Fed. We have the 10-year yield at 40107, that's just a little bit higher, and the 30-year yield 462.56. And let's take a quick look at the US dollar over the last year. It's weakened 10%. Does it continue to after today? Well, we'll see. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.